Hey everyone, welcome back to the Expert Trade Ideas channel. Today, we're diving into the recent capital flows in Bitcoin, particularly after the Federal Reserve's 0.5% interest rate cut. As you probably noticed, Bitcoin has been reclaiming some important price levels, so let's break down what this means for the market and you as an investor. First off, Bitcoin has reclaimed the short-term holder cost basis, which sits at around $61.09k. Now, this is a pretty big deal because when the price rises above this level, it means short-term holders are no longer underwater on their investments, reducing the pressure to sell. But it doesn't stop there. Bitcoin has also climbed back over the 200-day moving average, currently at 63.9k. If it holds, this could signal a more sustained bullish trend in the near term. Let's talk market momentum for a second. Capital inflows into Bitcoin have slowed down, especially after we hit the all-time high back in March. This can be confirmed by looking at the smoothed 155-day gradient of both the spot price and the realized price. Interestingly, the spot price saw more aggressive downside than the actual outflows of capital, meaning investors were selling off, but not in panic mode. However, the price correction did push Bitcoin below the cost basis of many new investors, especially those who bought in late June. Many of these holders have been in the red, but it's important to note that these losses are far less severe compared to previous bear markets. Now, the current phase of the market is consolidation. Prices are ranging, and new capital flows are relatively muted. We're seeing a net capital outflow, but this isn't as dramatic as what we saw during the COVID crash in 2020 or the mid-2021 sell-off. That said, the cost basis of younger Bitcoin holders is now lower than that of older investors, which suggests that this market is still struggling with outflows. Turning our attention to the futures market, the Perpetual futures space has been showing signs of cautious recovery. We're seeing speculators taking on more long positions, but we're still far from the bullish sentiment that characterized early 2023. For instance, while the average weekly funding rate has ticked up to around 0.05%, it's not yet at levels where we'd consider the market to be overheated with long leverage demand. So, what does this all mean? Well, we're in a period where Bitcoin is consolidating, but there are some key takeaways. First, the confidence among new investors remains relatively strong, despite recent capital outflows. Second, while the Perpetual futures market is heating up slightly, we're still in a more cautious phase. The next few weeks will be crucial to see if Bitcoin can hold these key levels and build on its recent momentum. Keep an eye on the 200-day moving average. If Bitcoin stays above it, we might just see the start of a new leg up. Thanks for watching. Don't forget to like, subscribe, and drop your thoughts in the comments. What do you think about Bitcoin's recent moves? Let's chat.